This portion of the Ray Lucia Show is brought to you by Pipeline Oil and Gas and is for informational purposes only. It is not intended to promote or sell securities nor give legal, tax, or investment advice. There are many risks associated with investment in oil and gas, including the loss of principal. Private placements in oil and gas are available only to accredited or qualified investors. Pipeline Oil and Gas is not endorsed by this network, the local stations, or the talk show hosts.
Hey, welcome back, folks. The more exciting part of the program today, joined by the handsome Brandon Cox from Pipeline Oil and Gas. Brandon, thanks for hanging on in studio today. Looking good, buddy.
Thanks, Ray. It's an honor to be here.
Thank you again. Okay, so I want to jump into this because you've introduced me to many of the investors at Pipeline Oil and Gas, and I know some people that have invested in oil and gas programs and projects, as you call them, and I've been learning. So I get the updates. By the way, thank you for sending me the updates on a lot of your wells. It's fascinating to me. But I got one the other day that you said we spudded the well at X and such time. You actually keep track of the time and date that the well is spudded?
Yeah, minute by minute, we track all that stuff. And drilling a well is a pretty extraordinary process. There's a lot of prep work that even you get into before you even show up on the field. I think the novice out there thinks that, oil business is 98% of the time you're drilling a well, when really 2% of the time you're drilling a well. Everything else you're doing your homework and due diligence. But once you officially get your site work done, you get everything prepped, you need to start drilling the well. And when they break the surface and the drill bit hits the dirt, that's called spudding the well, and that's the very first part of the actual drilling itself when you're setting up to drill a well.
You and Stephen both told me the story about one of the projects where you spudded the well with minutes left before a lease ran out or something?
Yeah, it went down to the wire, and it was a pretty cool story, but they were out there drilling a well, and they had 45 minutes left before the lease expired, and it was out there 11 o'clock at night. Here you are coming up towards midnight, and sure enough, they got the well spudded, and the guys that were ready to take over that project were sitting there with his attorney in the pickup truck, and they actually drove off as soon as they saw that the well had been spudded, which then secured the lease for another period of time, so they were able to keep the project.
And that particular project, I drove through with you a month or two ago, and that's a pretty prolific thing. It's producing some pretty serious oil.
Turned out it happened to be the largest Wilcox Frio find in the entire state of Louisiana. And for those who don't know what the Wilcox is, that's kind of the bread and butter, the ideal pay zone that you want to have out in Louisiana. If you're dealing with these formations, because they produce for 30, 40 years with relatively low maintenance. So what a story to be able to secure that lease and have the largest find in the entire state of Louisiana.
So is there somebody there that documents when the well is actually spudded, the exact time?
Yeah, I mean, they'll show up out there, and everything is regulated in the oil and gas industry. It's not just a bunch of people drilling holes wherever they want. Everything has to be surveyed and permitted, and just like building a house, almost identical. So they're on top of it out there.
All right, my guest, Brandon Cox, talking about the oil and gas business. I have a question for you, Brandon. Out of all the places you could have put your money over the last 20 years, and I know you've got experience in real estate and other investments, out of all the places you could have put your money, where do you suppose you would have done the best?
Well, unless that's a trick question or something, I would feel like oil. I think, if you look at the stock market, that's one way of looking at the energy sector. If you look at, directly participating in projects, that's another way of viewing it. But from a stock standpoint, I feel like the oil market was kind of sluggish in 2013 compared to other sectors. This year, we've had some room to run, and I feel like we've got some additional room to run. Of course, if oil prices come down, stock prices in the oil sector will be affected. But overall, I think it's still a pretty healthy sector to be in.
Energy, #1 producing sector over the last 20 years, according to Mr. Bernstein, who I was quoting from before, followed by healthcare, both north of 12% compounded, not bad, and then info technology, and then consumer staples, small cap value, emerging markets, sovereign debt, all of those up there in the double digits. In the low single digit, the average investor only beat emerging markets in Asia and Japan, and in fact, barely beat inflation. So obviously, you want to have those types of assets in your portfolio that have the high likelihood of going up. Now, if that average investor would have just stayed put and not timed their way in and timed their way out, they would be up there near that double-digit number. It was the investor that did it to themselves. Now you, Brandon Cox, are involved in the direct participation business. You're not in the stock market business. So a person doesn't necessarily give you a check and then expect to get all their principal back tomorrow.
Right. I mean, it's something for somebody to consider. If you're looking at the stock market and where we're at today, the non-correlating feature of our direct participation programs is pretty phenomenal because, you know, yes, it's somewhat tied to the stock market, but not as much as if you were directly in the stock market. So it's a great way to hedge your risk within your portfolio, in my opinion.
Well, it also forces you to do something that we naturally don't want to do. It's just like buying an apartment building or something like that. You just can't, point, click, sell the first time you hear a news report that the real estate business is going to heck in a handbasket. Same thing is true. You see the oil prices decline. You can't point, click, sell. You have to hang on because what goes down typically goes back up. And this is why you want to have a diverse portfolio of stuff that does gyrate, and you want to buy and hold that with attached to some strategy. And it's okay to have a small percentage, that is if you're an accredited investor, in asset classes like real estate, asset classes such as timber and such as oil or energy, and that's your specialization, obviously.
Yeah, and it's been working extremely well for us. We've had a ton of success, and there are ways that we've been able to position ourselves so we have a great predictability of what can happen out in the field. So 2014 has been a phenomenal year for us, not just as a company, but also all of our clients. 2015 shaping up pretty good well. So we're in a really good spot. The market's helping us out, of course, but we also got a great team out in the field that makes it possible.
Okay, I want to talk about technology because I learned something in the oil fields from you, of course, and your operator, Stephen Ford, who's a terrific guy, by the way. And he talked about doing something with cement. And I'm thinking if it puts cement down a hole and it cures, then the hole's going to be plugged up. How am I going to get oil out of it? So when we come back from the break, I want you to explain that and then explain why I saw a big dump truck or trash truck out in one of the fields, okay?
Piece of cake.
All right. When we come back, you're going to learn about this oil business, like it or not, because it's really fascinating and exciting and fun. And I'm learning every day from my special guest, Brandon Cox at PipelineOilAndGas.com. In fact, if you want a white paper that explains all this stuff, just go to his website, PipelineOilAndGas.com, or simply call 800-996-3690. Pipeline Oil and Gas. I'll be back with Brandon right after this.
The Ray Lucia Show.
Well, folks, there's a couple things we know. We know September is usually a pretty doggy month for the stock market, but ironically, it's not for the purchase of gold. So my friends at Swiss America wanted me to pass this along to you in addition to the offer, the standing offer that you get from my pal Craig Smith, who is the founder of Swiss America, to get his white paper. And now the book is in print, the brand spanking new book that he has coming out. He has a bunch of books, but this one you want, don't bank on it. Call 800-289-2646 to get the book, 800-289-2646. But what I learned today is September is historically gold's best performing month of the year, returning on average 2.16% since 1969. That's according to Frank Holmes, the chief investment officer of U.S. Global Investor, and no other month, by the way, even comes close. That's certainly no guarantee, but it does give us some awareness that it may be time for you after a double-digit decline over the course of the last year. You know, usually something that goes down comes back up. Now may be a time for you to add some gold to your portfolio. Before you buy anything, I want you to read Craig and Lowell Ponte's book. Don't bank on it, and you get it for free. Just got to tell them you heard it on the Ray Lucia Show. 800-289-2646. That's 800-289-2646. Back with Brandon Cox. Okay, last segment, Brandon, we learned about spudding the well. That's when the drill bit breaks ground, correct?
Yes. It's like, anytime they build a new building and the mayor comes out and there's the whole, shovel. It's the same thing here. We've just basically broken ground, and we're going down to the next step of this drilling process, which is setting the surface casing. So
okay, so that, I think that's, you reminded me, that's where the cement came in. I couldn't understand why you'd be pouring cement down a hole.
Well, I mean, if anybody can visualize a piece of pipe that's running down into the ground, well, if that pipe is exposed to moisture and the elements, eventually it will rust. Now, we use a special kind of steel pipe or casing that goes down in the ground that's very resistant to the corrosive elements that are out there. But we go ahead and push the concrete through the pipe, which then comes out the bottom and then moves up the sidewalls of that pipe on the outside. So now you have that pipe, the steel, being protected and buffered by that layer of concrete. Just like a foundation in a house keeps you separated from the elements below, the concrete secures, stabilizes, and prevents any chance of a possible leak within that 650 feet barrier. And if you think about 650 feet, that's a 65-story building, essentially. That's the height or the depth that they're going down into the ground to secure and make sure that there's no contamination of the natural resources or anything to the surface of the land that we're working on.
So the green folks are going to compliment you on that. Does everybody do that?
Yeah, it's so heavily regulated. Those are the steps that you have to take to prevent any kind of accidents. But again, it's part of our day-to-day operations. We embrace it. We don't want to cut any corners. We take a lot of pride in really making sure that we've done a fine job at the beginning part of this drilling process. So when we do find oil, we don't have to worry about going back and cleaning up anything or making any repairs.
So in talking with Stephen Ford, the operator, he said, we're down 600 and some odd feet. I get your updates all the time. And he says, I can't wait to nipple up. What in the world does that mean?
Well, it could mean a lot of different things, but in the oil field, it's referring to establishing and setting up the blowout preventer, because once you get past that 650-foot barrier, there's a chance that you're going to hit high-pressured areas, whether it's gas, water, oil, anything that can come up that pipe that's not controlled and jeopardize the safety of the crew on board, or again, the environmental impact that it may have. So when you nipple up, you're connecting that pipe to the blowout preventer to give you additional security and safety when you're working on the rig.
Fantastic. So the update I got on my email just yesterday, the day before, talked about going down to, 7,200 feet on one of the current wells that you're drilling.
Yeah.
Now, that seems deeper than the other ones that I've seen.
Well, I mean, it just varies area to area. In this particular case, out in Louisiana, our wells are anywhere from 8,000 feet to 3,000 feet. So it just depends on a particular project. They're all unique and different, as well as the pay zones that you're going after. So you have to treat each well as its own special little project when analyzing where the oil's at. But this particular one, 7,200 feet, about 1.5 miles down into the ground. Okay,
so what was that big monster truck that I saw out in the fields?
It was not a trash truck, but it looks like a trash truck. So on one of the recent trips out there, you saw a blue Schlumberger truck, and what happens is anytime we TD or touch down in a well, there's a great little football term for you, but you get there and all of a sudden now you have to go in and log that well. So Schlumberger comes out and it's on a wire line. And on the end of that wire line, there's a tool that runs down the hole and measures inch by inch what you have. But while it's measuring the depth, it's also gathering information, because it's sending out these rays that bounce off the structures of the rocks and come back and report up that wire line to that big blue trash truck, where all the computers and software are that interpret the data that's been collected. And that's where you know precisely what kind of formations you have, how thick the pay zone is, the permeability of the rocks, porosity, gives you everything you know to make an educated, informed decision on if you want to complete that well and make it commercially viable.
So the pay zone, I heard Stephen talk about an 8-foot pay zone. What does that mean?
Picture an 8-foot thick pond or swimming pool or whatever, and that's your oil. But in that thick pay zone, that sand, you have sand. So you have to separate the sand from the oil. And luckily, when you're dealing with fluids, if you give those fluids a path or a highway to get on, they'll go with it. And that's where the sand will stay behind, but the oil and water is able to travel through the cracks of the sand and make its way to the wellbore so it can then be extracted to the surface.
Fascinating stuff. Brandon Cox from Pipeline Oil and Gas. He's got a white paper, by the way, that does explain a lot of what we're discussing here. And if you're a little slow like me, it's taken me a couple of months, actually, of learning and I don't want to say you drilling it into my head, but we've had so many puns today, I may as well. But it is really, really fascinating. Go to pipelineoilandgas.com and get the white paper that Brandon and his folks have prepared to educate you. Because really, as I said before, you want to be educated. You want to be an informed investor. You just don't want to throw your money into something just because Brandon's a good-looking guy. Now, I do want to talk about failures because I saw you one day with a solemn look on your face, and about a month later I heard you talking about the same well, and you had a very happy look on your face. So talk about some failures and successes.
Well, I mean, risk is out in the oil field. We talk about it on each show that we're discussing what's going on out in the oil and gas field. But, you know, for a failure, you have to analyze that risk and go, whatever you do, make sure that it's nothing that can hurt you so bad that it causes you to lose everything out in the field. So for us, when we're analyzing these wells, we're collecting data. And it's a two-step process. The first part is just drilling down and then logging the well, which we just discussed. But that's going to tell you how you can, you know, complete the well or plug the well and move on and use that data for a better location, which will give you a higher probability of having a better well. So in this particular case, we drilled a well and it wasn't what we wanted to see. It would have been a producing well if we would have chose to complete it. We felt like it would have been better to keep our money in hand and apply that money towards a new well in a better location, and it worked out true to form. You know, the first well would only produced about 10 barrels a day, but we moved 600 feet over, and we got a well that's producing 70 barrels a day. So much better use of our resources. We had to wait a little bit longer and do a little bit extra work to get to that point.
And it costs you a little bit more money.
Absolutely. But at the end of the day, when you're drilling oil wells, if you just drill one, it's terrifying. If you drill 100 wells, the numbers will work themselves out, and you don't need every single well to be successful because of the financial benefits that are associated with oil and gas really give you a buffer that you can work within, so you don't have to be perfect. We're not saying we're perfect. We've drilled 49 wells in 36 months. 46 of them have been successful wells. But it does happen, but we have, again, a very high predictability factor of what we're dealing with because we're working in proven pay zones, proven reserves that really make us look good.
All right, Brandon Cox, he's with Pipeline Oil and Gas. If you want that white paper, go to pipelineoilandgas.com or call 800-996-3690. You've got a trip. You got about 15 seconds. Tell us about your upcoming trip.
Well, we're going to go out there and see where all the magic happens, and that's the best part, going out there and seeing it, smelling it, hearing it, touching it, you know, being involved firsthand, meeting experts, meeting the pros. Come see it. I
can't wait to nipple up. God, I just can't say that anymore. Brandon Cox, great guy. Go to pipelineoilandgas.com. Very, very good lesson plan and a good session today. We're learning as we go, and keep those emails coming to me. They absolutely fascinate me. We'll come back with your emails with Rob Butterfield. 877-PLANNERS, the number, raylucia.com. Click on the Ask Ray button. We'll be back.